Welcome to Let's Get Into It. I am your host, Sherelle Higgins. Let's Get Into It is a safe space to have real conversations that are meant to uplift, encourage, and let you know you are not the only one dealing with life. Each episode of Let's Get Into It is designed to provide illuminating and thought-provoking information on a variety of topics. In fact, no topic is off limit. If you would like to see a topic discussed, please feel free to make a recommendation. My special guest and I will have a great time discussing topics that the mainstream media wouldn't dare discuss. We will bring these conversations to you with an open mind, respectfully, from different perspectives, and most importantly, with love. Thank you for joining me and my special guest. Now, let's get into it. Hello, hello, hello. Welcome to Let's Get Into It. I am your host, Sherelle Higgins. I want to thank you for joining me today for this very important topic. Me and my special guest are going to talk about life insurance. And more importantly, we're going to talk about why we choose not to have life insurance. And so I have so many feelings around the subject of life insurance and how important it is and I want to make sure that we have an authentic conversation and really give you the facts about life insurance. And hopefully, if we could just change one person's perspective on life insurance, if you don't have it, that you go right out tomorrow and you contact my special guest and you ask her to help you get a life insurance policy. So I am going to bring my guest on the screen and I am going to introduce Sabrina Grimes to you. Welcome, Sabrina. Thank you for being my special guest on this lovely Thursday evening. Sabrina is a mother of four. She has one grandson and she is a former federal employee. She has always been a part time entrepreneur at heart and would have part time jobs to offset the cost of kids' activities. And if you have kids, you can completely understand how much those activities cost. She's done a little bit of everything. She's sold African American art. She's done some health and wellness things. She has also worked at department stores. And she stopped working at the department stores because she realized that it was just taking her away from home. And so one day, a friend of hers jumped in her inbox and asked her if she was interested in a part time opportunity. And Sabrina, being an entrepreneur by heart, said, I am interested in an opportunity as long as it's moral, is legal, and ethical. Those are three great things to live by because jail is no fun, I heard. That's what the people say. I ain't never been. I'm not never trying to go. Um, and so this was the opportunity for her to get in the business of financial services. She received her life insurance license in March of 2017 and will receive her investment license this month. She has helped many families discover what their financial independence is, uh, discover what their financial independence number is. Also, she as well as their needs for life insurance coverage. She speak at church events. She have financial wellness events to assist the community and increase awareness on the appropriate life insurance options for families. She is very much in love with the crusade of helping families change the trajectory of their family dynamics. And so, with that said, I will introduce to you and welcome again my special guest, Sabrina Grimes.
Thank
Welcome.
you so much. I am so honored. I am so honored to be here. I appreciate you. This topic is near and dear to my heart, so I'm super excited.
Great, because I am too. Um, life insurance, I looked up a statistic. And 44% of the people who are uninsured are African Americans. That's a large number of people. 44% of those, that's almost half of the people who are uninsured are African Americans. And so, hopefully today we will encourage somebody to get life insurance if they don't have it, or to at least review what they do have to make sure that it's adequate.
That part. Mm-hmm.
And so, my first question to you, I like to set the foundation for people and a baseline. And so, what is the difference? Because people don't know the difference between permanent life insurance and term life insurance. Can you explain the difference for us?
Okay, so permanent insurance, meaning the other name would be whole life insurance versus term insurance. People misunderstand that all life insurance can basically extend you to the end of your life, right? All life insurance is a contract. So one contract says we're going to insure you to 98 or 100. The other contract says for the first period of time, which can be 15 years, 20 years, 25, 35 years, we're going to place you in this contract. At the end of this contract, you have the option to extend for future years. So what people fail to understand is term contracts don't end. You can always extend them. The idea behind term says, I'm going to have this life insurance for a period of time while I build my wealth. As I build my wealth, I'm going to decrease the need for life insurance. So when I'm at 1 million or 2 million or whatever my wealth number is, I'm not going to need that $300,000 policy anymore because now I'm self-insured through the wealth, if that makes sense.
That makes perfect sense to me. That's a great way to describe that. Talk a little bit more about whole life insurance.
Hold on 1 second. So whole life insurance basically is a two-pronged product. You have the death benefit. Excuse my puppy. Somebody must be coming in here. You have the death benefit and you have the savings element to that policy, right? So what occurs is the death benefit could be $100,000, $200,000, or whatever that death benefit is. And then they say we're going to set aside a small amount of money into the savings part. So you got a little savings account off to the side, right? But what people don't understand is at the point of death, your family is only going to get one or the other. So I'm going to get the death benefit or I'm going to get the savings amount, whichever is greater. So you're not going to get the entire amount of money. They're not going to get 200,000 here and the 50,000 over here. That's not ever going to happen. So that's what people really don't understand about building the money. And then if you want to use the money that's in that savings element, you have to borrow it because you have to submit a request to the insurance company and tell them why you need it, right? And then once you borrow it, you use it, you're expected to pay it back at a higher interest rate than you actually began to save the money at. So the math isn't mathing because
Math is not math.
If it only grew at 3 to 4% interest, and I got to pay it back at a 6 to 8% interest, it's like you bending me over like a credit card. It's like I just used you like a credit card, but wasn't it a portion of my money that I was putting in here every single month? So why do I need to borrow it? I believe that there are circumstances necessary for some people to have whole life, but my recommendation is never for younger people to have it. More so if you're uninsurable or you're over the age of 70, when you have your life expectancy is less, then you have less chance to lose money. The younger you are, the more money you build up, and then you're losing maybe $30,000. If either way, you're still losing it because if I still got to borrow it and pay it back, I'm still losing because now on top of my premiums, I'm still paying you more because now I'm paying you more interest because I decided to use the money.
Got it. I did not know that. So that's very clear to me. And that's good to know. because actually I was talking to a girlfriend the other day, and she was saying that she had life insurance on her kids, and she's been having it on the kids since they were born, and they she has a whole life policy. And she was like, and it's building this money, but the truth of the matter is not so much.
Not so much. And especially for children. So this is the thing. When you first initially get a whole life policy and you think you're saving that money or building that money to the side, it's truly not accumulating for adult ages for that first 3 to 4 years. But
Mm.
for children, that money accumulation is normally 5 to 8 years. So you're not saving. So that extra, $10 or $8 or whatever you think is going into that bucket for you to use, you're accumulating zeros. When you look at the statement, it continues to say zero every single month for 3 years, 5 years, 8 years. You don't start seeing the accumulation happen until that period has exhausted. And then you start seeing the money start to accumulate. So when people are doing the math that says, I've had this policy since my child was 18, why do I only have $1,500 in here? You know what I'm saying?
Hmm.
That's why, because you were accumulating it at a very low interest rate, and then it didn't start to accumulate day one. It didn't start to accumulate until year 5 or year 8.
And
So
so let
those
me
should be
ask you
those Gerber policies. They used to sell us the Gerber policies. You
this.
have a baby and you got the Gerber like, yeah, no, you're going to be able to send your kid to college. I have never seen any customer with a Gerber policy to the child turns 18. That's enough money for them to do much of anything with. Honestly, you got to
Interesting.
maybe a couple $1,000s.
Okay, and so with that being said, then as you said earlier, it doesn't make sense to have a whole life policy because you're not really gaining anything. You just have this money in this bucket that you really can't touch. And if you do, you got to pay it back at a higher interest rate. And if you happen to pass away, you probably, your family's probably going to get the death benefit because
Mhm.
that's going to be more. And this money is just money that goes back to the insurance company.
Absolutely.
Oh, wow. Okay. Yeah, let's pop this thing off right. Let's get into it. Okay.
Mhm.
So that's clear. So I just wanted to lay the foundation. And so, can you tell us some of the benefits of life insurance?
Benefits of life insurance. Life insurance as a whole is income protection. First and foremost, it's income protection. People look at it as I just need something to bury me. I just need a little. That's why, and I love the statistic that you gave in the beginning about how many people don't have it, but it's a greater statistic on how many are underinsured because
Mm.
that's what we really have walking around here is people who are drastically underinsured because they're going off of what their parents did, their grandparents. They had a little $5,000 policy, a $20,000 policy, and they think that's good. Even 50,000, right? And I'm looking at, okay, well, how many children do you have? You have 2 children, age 10. You have a mortgage now. Our mortgages are different. We're not doing the $20,000 mortgage back when our parents and grandparents had houses, right? We're on the 500, the 400,000, the $600,000 scale, right? So I got 2 kids that I got to deal with college. I got a mortgage of $600,000, but I got a $50,000 life insurance policy. Make the math make sense. So
And
if life insurance is income protection, we have to lay the groundwork on what are the things that you have to protect. Do you intend on 2 of your children going to college? Do you intend on the house being paid off or at least halfway paid off? Do you have automobiles, credit cards, all those things? That's what the life insurance is really supposed to be for. After you take care of the funeral expenses, those are paid. Everybody that came past your house with the casserole and all that, they gone. They're not asking you how you making ends meet, right?
come on now.
You still got to pay the rent. The lights still got to
Absolutely.
stay on. But now your partner, your spouse is no longer here to help you balance out that other half of that income that was helping you guys sustain. And a lot of people are just sustaining, kind of barely making it paycheck to paycheck. So if I'm only making it paycheck to paycheck and I lose half of the income, how in the world am I going to be able to sustain a good quality of life matching what we had Or, are we looking at doing better? Are we looking at leaving our families better off if we're not here? Right. So life insurance is in essence really supposed to be for income protection. And it's during the time that you have these expenses. So we understand that there's a term called decreasing responsibility. So if I'm 35 years old and I have a 500,000 to $1 million policy because I have all these assets, well, when I'm 65, I don't necessarily need a $500,000 policy because my mortgage is paid off prayerfully, right? I don't have a car note. My children are grown. They doing their own thing. I don't have to worry about college fees and expenses and things like that anymore. So now my quality of living, the expenses aren't as great. So now I don't have to carry as much life insurance in my 60s and 70s as I did in my 30s.
Got it. Got it. Okay, so uh should parents have life insurance on their kids?
100% yes, resounding yes. And that answer, can just be proven by all the things that are happening today in society. Young people taking each other's lives, young people taking their own lives, and things like that. There's so many things going on. People have no respect for quality of life. So no one knows their death. You didn't know your birth date, so you don't know your death date. And we all live like we're all going to pass away before our children. And we've seen so many families devastated by the loss of children, at birth, at age 5, at 6 months, a year, 18, 25. I mean, it's just crazy. So I've had a lot of clients say, I don't want to get life insurance on my kids because if I get life insurance on my kids, then something's going to happen. So if something does happen and you don't have life insurance, do you have $20,000 in your back pocket to pay for the expenses? Absolutely,
Exactly.
absolutely not. Absolutely not. I have a nephew that passed away, and they had $10,000 of life insurance on him, but the funeral was 20,000.
Mm,
So where do we go wrong as a community on that, caviar desires on a beer budget situation? Now we got the GoFundMe's. How are we going to come up with the other part of the money? Well, now we got to get to borrowing. We got to beg, borrow, steal, have fish fries, all that kind of stuff to come up with the rest. So why place that amount of heartache on top of the loss? Now I got the heartache of trying to figure out how I'm now going to pay this bill to lay them to rest. Then, not only that, when do you have to go back to work? 3 days, 7 days, 2 weeks with no income? Even if you have life insurance on your child, God forbid they pass away, once that occurs, if my child passed away, I probably wouldn't be any good for probably a year. And if I was tied into an employer, I don't want to have to negotiate if I'm going to get paid. And I got life insurance. Life insurance is going to be my salary right now while I grieve the loss of the loved one. So I absolutely am. With my clients, I automatically put life insurance on the kids. I'm like, I start out with 20,000. You can. So with the term policy, you go up to about 50,000 on children. I don't recommend people, trying to get 100,000 on kids. Why? You're not trying to benefit off of the death. You're
right.
just trying to lay them to rest and make sure you have enough to take off work and do the other things that you need to do while you try to put your life back together. So that's just my view on life insurance on children. All children should have it as soon as they come out the womb. 7 days after, I'm putting life insurance on my clients' kids. That's it.
Okay. So let me ask you this. What's your thoughts on parents leaving minor children as the beneficiary on life insurance?
So in that regard, so I have two concepts here. I say yes, leave the children something, but not 100%. And it depends on the age. Okay. So if if the child is under 18, my recommendation is always set a percentage aside for the minor, and then whoever is going to be the person who is going to be caring for your children as they get older and they're responsible party, they get a larger sum of the life insurance because they're going to be taking care of the expenses of the child. But I always say, money changes people. So you could have that good girlfriend or that godmother or that godfather, whoever that is, and say, they're going to be the beneficiary. They're going to take care of my kids. And I know they're going to do the right thing. Well, if somebody's never received a check for $250,000, your child is 10 years old. That person has, another 8 years to be raising your child and things like that. Your child turns 18 or 21. They're looking at that person that says, okay, where, do I have money to go to college? Well, they're saying, I spent the money the best way I knew how. I did this and I did that for you. I did that. And the child is left with nothing because
Mm.
the parent left 100% to the adult. And I tell people, I don't care who it is. I don't care if it's your grandmother. I don't care if it's your baby daddy. I don't care if you intend for your child to have something secure, even if it's 20% of what you have, 30%. And then that life insurance is tucked away for them until they turn 18. And then they can get that check issued to them, but it's secured in a trust until then. And it's growing interest. So the kid's not really losing, right? But I always tell people, I tell my clients, look, have you thought about, before we meet, think about your beneficiaries. Think about your contingent beneficiaries, because sometimes people just have one set of beneficiaries. And sometimes with the wife and the husband situation or the spousal situation, you're each other's beneficiary. But I keep it 100. You say, let's get into it, right? Let's get into it. I tell people, if you and your husband are away on a vacation somewhere and something happens and you guys both perish, where does the life insurance go? We don't say it just automatically goes down to the child. That's why I tell people, assign what's called a contingent beneficiary at all times. That's a backup beneficiary. No matter what happens, backup beneficiary is always recommended just in case.
And I agree with that. My mom always said, I have a younger sister who is 14 years younger than me, and I'm not even the oldest. And she
Mm,
always said, I am not leaving this minor child all of this money when someone has to take care of her. And so she was like, I'm going to leave the money to the person who is going to be most responsible and who's
mhm,
going to take care of my child, because she experienced, um, her sister passed away and she got some of the kids.
mhm,
And as kids got older, it was exactly what you said. Some of them was like, you spent my money. No, I
mhm.
spent the money to take care of you. And so my mother, that always left a bad taste in her mouth. And so she wanted to make sure that that was not going to be my youngest sister's story. And so
Exactly.
it is, really important. And so, leaving money, and I like the idea of leaving the minor child something, so that when they do become of age, they have something of their own. Because, like you said, money changes people.
Mhm,
And when you have $250,000, people don't realize how quickly that money can be spent. And
absolutely.
a year from now, you won't have $250,000. And then you still stuck with trying to raise a child that's not
Mhm,
yours. And now you don't want the child at the house because you done spent all the money associated with the child. And,
mhm,
we all know the two things that cause the most friction in a family is funerals and weddings. And
mhm,
so, I thought it was important enough to talk about that, because so many people don't think about it because they've never been faced with it, or they don't think about it, or they think, like you said, they got this good girlfriend that they know for sure will have their child's back, or the
mhm.
godparent will have the child's back. But when you think about, and some do,
Right.
But when you think about it, most kids who have godparents don't even have a relationship with those godparents.
Exactly.
You know,
Exactly.
and you leaving it to the godparent, and now, you're forcing not only this child to have to grieve your loss, but now they have to move into a strange place where they don't know people, and these people got this money that they supposed to use
Mhm.
to take care of them, but they telling them that they can't get the latest Jordans or they can't get their hair and nails done because that's what kids get now. And
Mhm.
um, and so I thought that was an important question to ask.
And that's difficult because when their parents were used to getting them those things, now they're traumatized with the death. Now, on top of the death, now my whole lifestyle has changed. My whole style of living has changed because of that circumstance. So that's why I ask people, what quality of life do you want your family to live if you prematurely leave, untimely death? What do you want your family to be able to live off of, and how do you want them to be able to live?
Mhm. And so, um, how often do you suggest people review their policies to make sure that they're not overinsured or underinsured?
They should review their policies probably annually, just like you take a look at your auto insurance. You've gotten a raise, you've moved, you had another child. Anytime you have any type of major life event, something is usually going on every year, every other year in our lives that causes a financial change. Um, but the fact that so many people are underinsured, I can tell you, like, on one hand, I probably have 3 clients, and they're men. Their men have $1 million plus policies. My single mothers don't normally get them. Even married couples aren't usually getting them because I don't really think they understand how they need to calculate what they have going on as far as expenses, their liabilities, and things like that. They just think about what they can see in front of them. If I got a funeral, I got to pay for a funeral. Somebody has to pay for a funeral. This is all they need. I have a lot of clients that say, "Well, I only want 30,000. I don't want to leave these kids nothing. My mother didn't leave me anything, so I don't. They got to work for theirs. I had to work for mine." And I just be like, I just clutch my pearls. I said, and you don't want your children better off than you were? It's about education. Your parents knew to do what they had enough information or the capacity of information to be able to utilize and pass down. Now you're in a better position. You have more knowledge because of the internet, because we're giving more education. We're talking about finances more. The economy is drastically different. So as you learn more, then you pass these things down to the generations. Why don't we want our generations better off than we previously were? And that's a lot of what I experienced. But when you look at other communities, they're utilizing life insurance to buy buildings. They're utilizing as soon as that grandfather passed away with $1 million policy, they buying laundromats, they buying carryouts, they putting all these things up in our communities, and we trying to figure out why. And we saying the government this, they giving them this, they give it. No, man, they give it. They pay cash money from a life insurance policy to be able to further the wealth experience for their families and their generation. They're putting these things together for their children. When will we begin to do those things? And a lot of times, wealth is built through life insurance, but we still have not cornered the market on grasping that concept. And that's really what I pride myself on communicating with my clients is let's talk about strategies. Let's not talk about this life insurance as life insurance. I don't want to talk about products. I don't want to talk about anything. What is what is your wealth strategy? What are you leaving behind to your kids? What is your retirement strategy? What are those things? Let's talk about those things because the word life insurance has people thinking all of these preconceived things and they get confused and they, get all these what is that, old wives' tales and all these historical things that they get stuck on. But let's talk about your goals, your dreams, your strategies. What do you have planned or what are your desires for your family? Let's talk about these things. And maybe the conversation takes a shift, and then we do understand how to plan for the future in the proper way. I like talking to 18, 20-year-olds, 25-year-olds about this because a lot of times their minds are more open. They're blank slate. They want to know this information. They're yearning for more information. They want to know how to be wealthy without working and things like that. So a lot of times the best conversations are that 18 to 25 or 18 to 35 age bracket because we're so stuck. I'm 51 years old. A lot of us are stuck in our ways and only want to understand and believe that work-life insurance is the best thing since sliced bread. I don't need anything else. So I was like, so you're dying at that job? So you're not going to retire. You're just going to die in the seat. That's what's going to happen? Like, we got to have real conversations because people got to understand. Number one, there are so many restrictions with the job life insurance. They ain't really caring about your kids. I've had many bad experiences with people in the job life insurances that it makes no sense, but it's like we think that's enough because it's coming out of our check. We don't think we paying a lot for it. And our issue is the amount of money that we have to pay for the life insurance. The amount of money, that's usually the kicker for people. But I said, what kind of purse is that you carrying?
Exactly. And that's a good point. I wrote down a couple things. One is it is so important to ensure that our kids get the financial literacy that they need.
Absolutely.
Because if a lot of these kids out here, this Generation Z, if $250,000 fall in their lap, in
They on Instagram. They on Instagram popping bottles.
in 6 months, it's gone. They done went out and bought the most flyest car they can that they can't even do the maintenance on 6 months later. They been gone and treated their friends, and now you got all these family members coming at you talking about can I borrow, knowing goodness well they're not gonna ever pay you back. There
Mhm.
was so my youngest sister has a friend. When she was 16 years old, her mother unexpectedly passed away.
Mm.
She was the only child, and her mom left her as the beneficiary. And so she gets all of this money. And I tell you, I distinctly remember being on the phone with her. And I said to her, that sounds like a lot of money to you, but I promise you it's not. I
Mhm.
said, people are going to come to you and ask you to borrow money. You need to learn how to say the word no. And you need to be able to say it to everybody. I said, because they're going to borrow money from you and they're not going to pay it back. They're going to have sob stories, try to pull at your heartstrings, talking about how their lights got turned off, how they didn't pay their rent. All of these stories are going to pull at your heartstring. But you have to have enough courage to say no. I
Absolutely.
said, and, consequences will come with that. And, some people are going to stop speaking to you because you wouldn't give them your money. And that's okay. Those are the people you don't want in your life anyway, whether they be family, friends, or whoever it is.
Mhm.
I begged her. When I tell you she did not listen, and yes, people started borrowing money from her. And next thing you know, the money was gone and she was trying to borrow $200 from me. Absolutely not.
Oof.
Absolutely not. And so, and I'm one of them people that will say, "I told you so." God's still working on me, and I told her, "I told you so." Like you should not be in this predicament. And she
Right.
was talking about all of the people who owe her money. I said, "Girl, that money is gone,"
Yep.
and that's why I told you not to give it to them. And I told you what was going to happen if you did. And
Mhm.
so we have to make sure that our kids are financially literate and know how to handle that kind of money, because while it seems like a lot of money, it can be spent very quickly. The,
Absolutely.
the other thing is, um, as sometimes as responsible adults, we have our priorities mixed up.
Mhm.
And so we will go out and buy that $1,500, $2,000 Louis Vuitton bag. I'm like, I don't even know Louis Vuitton, so I don't know why I would be giving him 2,000 of my dollars. I just don't know him like that. And so, and all I'm getting is some bag that he had probably only paid $50 to have made.
Exactly.
Make that make sense. And
Exactly.
so, because some of us don't have our priorities straight, we think we can't afford life insurance because
Mm-hmm.
we are too busy affording the things that we can't take with us.
Yep.
And we are affording the things that are not giving us any financial benefits. And
Mm-hmm.
so I know for one of my kids, as soon as she aged out of the policy, the life insurance policy that I was getting through my job, I immediately put a policy on her.
Mm-hmm.
And I will tell you that that policy cost me $20 a month.
Yep.
$20 a month. And people are saying, I can't afford a life insurance policy. If you have a daughter and you are getting her nails done, you can afford a policy. If
Mm-hmm.
you are getting her hair done, you can afford a policy. If you are buying her cosmetics, you can afford a policy. If you are buying her designer shoes and pants, shirts, and she's going to concerts and hanging out with her friends, and you got money for the movies, you have money for a life insurance policy. It's just a matter of prioritizing that as a priority and say, okay, well, you can't get your nails done this week because I got to pay this life insurance policy. If that's what it boils down to. If you have a son, unfortunately, our young Black men are dying at an alarming rate.
Absolutely.
And it could be from a wide being at the wrong place at the wrong time. It could be at the hands of the police. It
Mm-hmm.
could be at the hands of a crazy girlfriend who thinks she can't live without you. I mean, it could be for so many different things. Other than things that happen, like got in a car accident and passed away, right? So you just never know, and so it's so important to have policies on our kids and making sure that we can bury them. One of the things my mother used to say to us is that money is for the living, not for the dead.
Absolutely.
And so she said, when I die, don't spend all that money on no funeral for me,
Mm-hmm.
because I'm not going to know one way or the other. And the money is for the living. And so, with that said, what's your thoughts on kids getting life insurance policies on the parents?
Absolutely. Absolutely. So with life insurance, and that's the very good segue. With life insurance, you have to have legally, you have to have a fiduciary responsibility or could potentially have a fiduciary responsibility for the person who you're getting the life insurance on, the insured, right? Therefore, the relationships go like this. Parents can have life insurance on children. Children can have life insurance on parents. Children can have it on their grandparents. Parents can have it. That's the relationship. Not, I'm going to get it on my cousin. I'm going to get it on my brother. Unless your brother is disabled and you're financially responsible for that person, right? The only instances where you're really supposed to be able to get life insurance on another party. Now, I have seen companies that are allowing people to get life insurance on their siblings, but why do you need life insurance on your siblings? Your sibling has children, your sibling has a job, so why do you think that's necessary? Well, in some people's situations, if a sibling passes away, they're looking at one of the other family members to take care of everything because with the work life insurance, sometimes that takes 60 to 90 days to pay out. So with the work life insurance, that's not an immediate. I remember working for the federal government and they that's when they first put the Samba in place. The Samba was that life insurance they paid out immediately, but that was
Mhm,
at like 17,000 because they know the larger policies they take a little bit longer to process. So they
mhm,
say, here's this so you can take care of the funeral. Well, that's what people, really don't understand is you're going off of this job life insurance, which you're not going to be able to get right away, but I want to bury my family member. Who has the money in the family that's going to be able to do that? So they're looking for another sibling to take care of that, right?
Mm-hmm.
Um, in my situation, my brother and I are the only ones left from our parents. So my brother's older than I am. So I said, all right, let's get this life insurance policy. We're going to get this thing started. You're going to be the owner. I can pay for it, but I need him to be the owner, but I'm going to be the beneficiary. Because if something were to happen, people are looking at me to make sure that my brother is laid to rest if
Mm-hmm.
he goes before I do. But
Mm-hmm.
the simple responsibility that I'm going to have, but I know that there's got to be life insurance because I'm not sitting on 20,000 that I want to put into somebody's funeral. I'm going to work and making my money to do other things, not to pay for a 10, 15, $20,000 funeral. That's not
Mm-hmm.
fly, right? So it's just very important for people to understand. And I want to kind of go back to when you were talking about the young adults, the children. What I believe people don't understand is the earlier you have life insurance on your children, the better, because we never know what situation they're going to encounter. It could
Mm-hmm.
be sickness, it could be trouble with the law. Your child could have a trait of an illness that passed down from the grandparent or the great grandparent that you have no idea is going to hit your child's doorstep, right? If that happens, that could render your child uninsurable depending on the illness. So then, when you do decide you want life insurance and that child has been diagnosed, now the life insurance is telling you no, that child is too high of a risk, or you're going to have to pay an exorbitant amount of money per month for a small amount of coverage. So that's why I say get the life insurance early. Legal trouble. We talked about our young men. It's young men and young women. If you have a felony and it's less than 10 years, a lot
Mm-hmm.
of the life insurance companies will not cover you because you're at high risk.
Mm.
Only a small amount of life insurance. And then some people want to cover people who are incarcerated. Well, don't you remember life insurance is a business?
Mm.
So they're not gonna throw 100,000 life insurance on Scooty that's in, the penitentiary that's got 10, 15 more years to do. He might get shanked in the jail, something might, he might kill himself, anything could happen.
Mm-hmm.
So they're not going to insure someone who's incarcerated. You got to make sure that you have life insurance on them before these bad things happen. So we're really poor planners. We're used to reacting instead of being proactive. And I believe life insurance at all costs is proactive. But we want to wait until, oh, I'm 55 now, I'm ready to get it. Oh, I'm 60, I think I need life insurance now. Then we complain about the price. You're much older. The life insurance is going to be much more expensive. Your life expectancy is shorter. At the end of the day, they got to get premiums. Life insurance company got to get premiums. They're not going to kick out this 75,000 and you done only paid $1,200.
That is for sure.
This
Because
is a business.
mine.
Yeah, people get mad at the life insurance company. No, get mad at yourself. You should have had it when you were 25. It's
So
like, go
let
ahead.
me ask you this: do all life insurance require a medical exam, no matter what the amount is?
No, they do not all require a medical exam. There are stipulations. And when people say, I don't have to take a medical exam, correct. You might not have to take a physical blood and urine, but the life insurance company ain't dumb. They're going to go to the Medical Information Bureau, pull your history of medical instances, your hospitalizations, your prescription drugs, your operations, your diagnoses, and think that information is accessible to us. Every single life insurance company. So the people that's looking at TV in the middle of the night, when they look at those Colonial Penn and all those companies that got the little asterisk beside $9.95 a month, and it's got the little asterisk. Well, $9.95 a month means per $1,000 unit.
Mm.
You got to understand the math. You're paying for the cost of insurance per $1,000 unit. So when people want to compare term policies versus whole life, you can get a term policy for $3.50 per $1,000 unit, where you're paying $9 per $1,000 unit on a whole life policy. But we as consumers don't know the questions to ask because we have a lot of people who are just selling us a product so they can make a commission. My goal is to educate the consumer because I don't ever want my customer to have buyer's remorse and not understand exactly what we did. Like, what was the transaction? What did I do? What did I buy? How much did I get? Did I pay too much? No, I might have 2 or 3 conversations with my client before we actually settle on, all right, this is what we're going to do for the appointment. Because I want them to go and think about the conversation, have a conversation with family members that they have to. Let's make this a solid decision so you're not changing it in a year or 6 months. I want to make sure that you understand totally, you're 100% educated on the information that I gave you. So if you got questions, it's like those little 1 or 2 questions. Well, what do I do if this? What do I do if that? If I get these questions all the time. So if somebody passed away from suicide, da 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 da. I was like, you got suicidal tendencies? Do they got bipolar disorder? What? Like, let's talk. Let's talk about why you're asking me these questions, right? Because sometimes there's a reason behind why they're asking, and I got to dig a little deeper. And that's why we have that series of medical questions. So, short answer is it's not required. So, with me, if it's 150,000, 250,000 on up, depending on the age of the person, we usually do a medical exam. Okay. Just because some people haven't been to the doctor in 5 years, 10 years, we want to understand what their current medical situation is. If they don't want to do that, if they don't want to do a medical exam and they haven't reached the threshold where it's mandatory, because there is a mandatory threshold for, the blood and urine. But if they haven't met that, even if the underwriter doesn't see enough medical history to determine what type of risk that person is, they could have gotten a prescription back in 2000 that they got but never filled, but it was still something that was prescribed. But because it was in your medical history, we can question that and determine whether you're a high risk depending on what that medication was for. We can see how many times you filled a medication. So how many times are you taking this medication? Is it for chronic pain? People got to be careful going to the doctor. I remember when COVID hit, everybody wanted to go to doctor to get depression medicine. Everybody wanted to go try to get some disability checks or something like that. They wanted to go tell their doctor, I don't want to go to work because I got this and that condition. Well, you're hindering yourself when you want to now go out here and get private life insurance because now you have all these additional medications on your chart that now make you a higher risk than you would have been prior to you saying you had these mysterious illnesses that really don't exist. You just were trying to get out of doing something and you're really hurting yourself in the long run because now you're creating a situation that really didn't have to exist.
I don't think people realize that. And so that's a good point and a good connection. So you mentioned suicide. Can people expect a suicide clause in all policies?
There is. Most life insurance companies will not pay in the event of suicide. Most. So we got an asterisk there.
Is that no matter how long they've had the policy?
For some companies, it's no matter how long. They just won't pay in the event of suicide.
Okay.
Because back in the day, there were a lot of people who were losing houses. And when the stock market crashed or the home market crashed and things like that, they felt like they were better off dead to their family than they were living because they lost the boat, right?
Okay.
A lot of that was happening. So with me, our company says as long as you had the policy for 2 years or better, we'll go ahead and pay even in the event of suicide. So if 2 years and 2 days after, then we're going to go ahead and pay. It's called what is it? Conditional. So we have conditional coverage, which occurs in the process of them first getting the life insurance policy that says, we're going to go ahead and cover you during the process of this underwriting period. A lot of life insurance companies won't do that. A lot of life insurance companies will say, you're not even covered for your first 2 to 3 years. So you're paying me premium. So if you die in year 2, all I'm going to do is pay you back the premiums
Oh, got you.
plus 10% if you
Mm-hmm.
pass away before, you're vested
Mm-hmm.
much. So that happens with a lot of whole life policies. You got to have the policy for a certain number of years before you're even totally covered. But that's why term policies are really good, because you don't have that type of clause. Term policies normally will cover you as soon as they get their first payment. As long as everything on the application is 100% accurate and true, nothing to dispute, they're going to cover you as soon as. So if somebody passed away 2 months after they got the policy, as long as everything was accurate and true in the application, they're going to pay out that premium to that family.
Okay. And what options are available for those who are uninsurable? They have some type of serious medical condition.
So for those that are uninsurable, uninsurable is relative, because there are some life insurance companies, like there are a lot of life insurance companies that won't cover any aspect of cancer. But then there are some, maybe one or two life insurance companies that you may find that will cover if you've had cancer, within the last 5 years or something like that. You might be hard pressed to find one. There are some that may cover HIV. I think there may be one. But when I run into clients that I have trouble covering, then we start talking about, let's put together an investment. So maybe we don't do the life insurance, but if you planned on putting $150 away, let's put that $150 into a mutual fund so that that money can grow over time. You can benefit off the interest, and you'll have enough, 20,000, 15,000, whatever it is. If you die prematurely, at least you have an opportunity to have built up some money so that you
Mm.
have something in lieu of the life insurance.
And
So,
so in the African American community, lots of people have high blood pressure, high cholesterol, and diabetes. And
mhm.
so what are their chances of being insured with those three illnesses?
They can definitely get life insurance, but keep in mind, term policies are very much cheaper than a whole life policy. So that's why people have to be relatively in good health to get a term policy. Because if I can get you a $250,000 policy for $35, $40 a month, I really don't want you to have any health conditions, because I want to be able to get this premium for as long as I can get it, right? So I need
Mhm.
you to be relatively healthy. If you're not, and you try to go get that amount of coverage from a whole life company, you're probably going to be paying $300 a month for it. So you kind of have to weigh your options when it comes to those type of things. But high blood pressure, not a big deal, as long as you're not taking more than 3 medications. High blood pressure, not an issue at all. Diabetes, there's a difference between being insulin dependent and pill dependent
Mhm.
or diet dependent. You know what
Mhm.
I'm saying? So the higher the risk is usually on the insulin side. So those may be a little bit more difficult, right? But your metformin and diet and things like that, you're still a higher risk. You're still going to probably have to pay a little bit more, but they're not going to forego giving you insurance in those situations, as long as you don't have any other underlying conditions that could push up your percentage of your risk level. So it's all about, the underwriter looking at the grand scheme of things, seeing all the things that you have that you're experiencing, and making a sound decision on your risk level according to your medical history, whether it's current, whether it's previous. They take all that into account.
And so have they put the Majernos, the Ozempics, have they put that in the category of the metformin?
So that's an underwriting decision. I don't have that particular medication listed anywhere on my application. That wouldn't be seen until underwriting says, all right, let me take a look at these medications. What are these for? Because I was just educated that Ozempic is, normally used for diabetic patients, but now people are using it for weight loss.
Right.
So if it's in that category, they're not gonna, guess if you're using it for weight loss or not.
Right.
You're taking that medication, which
But
is
that
now putting you in that risk factor, or
mm,
that category factor of that risk. So people really need, and that's a really great example, of those things. I got people that say, hey, I got a whole long list of medicines. All right, well, tell me what you on. I'll just be like, oh, goodness gracious. Wow.
So what about this though? Um, there's medication out there that help you control all three of those. Assuming and even like with insulin, it helps control type 1 diabetes. But type 2 is typically exercise. You can control it without taking medicine if you so choose.
Mm-hmm.
The right thing. So, what if you're on medicine and it's all being controlled by the medicine? And so when they go in and look at your medical records, they see that your blood work is showing that it's being controlled.
Doesn't matter.
Okay.
Doesn't matter at all. Because what if you decide
To
in
stop.
2 months to stop the medication and the doctor didn't tell you to stop and you
Mhm.
go into a diabetic coma?
Mhm.
They can't guess or determine whether you're gonna take it upon yourself to stop your medication or stop eating right or stop doing the things that the doctor told you to do.
Mhm.
Err on the side of they're taking this medicine every single day as prescribed until the doctor gives us a note of good faith report, a letter of good health. What's going to happen is get your doctor to let us know that you're no longer a risk to this particular illness. Let the doctor give us a note signed on their letterhead saying that you're no longer in need of taking this medication. Sometimes you have to be off of it for 6 months to a year. It just
Mhm.
depends on the underwriting requirements. So
Okay.
we let underwriting take care of all that. I just put the information in. I just say, let's see what they're going to do. I don't tell them, oh God, you ain't going to get covered. I never tell a client they're not going to get covered for
Mhm.
one reason or another because underwriting is subjective. My underwriter that, came in today, may let something go. The underwriter that was there 2 days ago might have pushed back on, what
Mhm.
I mean? So it just depends a lot of times on the guidelines and the underwriter and their perception of what they see in the medical records. And sometimes I've gone back to challenge, a rating or something like that a client has gotten that says, hey, we've got this letter from the doctor. Can you revisit this for me? Because, we want to try to get their rating down lower because they're paying like $120, $130 a month for probably $50,000 in life insurance. And we're trying to get them down. The same goes with smoking. If people are smoking, your life insurance is going to be considerably higher. If you're older, younger people don't necessarily feel that price point impact because remember, the per dollar on their life insurance is lower. So they're not going to feel the hit of that increase as heavily as somebody in their 40s or 50s or 60s that smoke. I've seen life insurance double for
Mhm.
people that smoke. But I
Mhm.
tell people, hey, stop smoking. You sign this attestation that says you've been smoke free for a year, and they'll reconsider.
Mhm.
With driving, we didn't talk about driving records, but driving records are also, something that they consider as well when they're underwriting your life insurance. Do you have a lot of driving infractions? Have you gotten a lot of speeding tickets? Are you always getting pulled over? Do you have any DUIs and things like that?
Mhm.
Take into account because I've had clients who've been on probation on their rate for life insurance where they had to pay an additional $20 or $30 for a year. But then after that year, as long as their record stayed clean, then they would go back down to the rate that I initially quoted them on. So there are a lot of things that come into, life insurance and what people have to be aware of in their day-to-day lives that could impact the rating on their life insurance or even being able to be covered by life insurance.
So time has gone quickly.
That
I
was
wanna
good. I had a good time.
Sabrina, tell people how they could get in contact with you.
You can email me, S as in Sabrina, last name Grimes, Grimes 306 at gmail.com. Or you can hit me up on Facebook. It's Sabrina Powers. Yes, I still use my maiden name. I still use my maiden name sometimes. But on Facebook, it's Sabrina Powers. You can send me an inbox or you can contact me on my office phone, and that is 202 600 6790. And I
Okay.
do complimentary quotes and things like that for people just to give them an idea. So No money up front. Let's just have a conversation and see what works best for them.
Okay, great. Thank you so very much, Sabrina.
Thank
I'm going to
you.
ask our audience to sit tight because now I am going to do the What the Hell segment. And this conversation on life insurance really had me thinking about what the hell. And so one of the things that just burns my soul is when I see GoFundMe for funerals. What the hell? You could have had a life insurance policy for as little as $20 a month, depending on your particular situation. And instead of doing that, you would rather wait until somebody pass away and set up a GoFundMe and expect strangers to put you away, as opposed to making sure that you have enough life insurance money available to you to put yourself away. So ask yourself, what the hell? And then if you don't do a GoFundMe, you will ask family members to chip into something that they're going to get no return on their investment. Nobody's going to give them their money back. Nobody's going to say thank you. They're just expecting you to help pay for somebody else's funeral. What the hell? I will tell you, one of my cousins passed away, was one of my favorite cousins, loved him to death. He had no life insurance, went into a diabetic coma and passed away, had no life insurance. And the family asked me to buy him a shirt. You would think that they asked me to pay for the whole funeral. What I did was I went right on down to the Goodwill, got him a shirt for $2.50, and I took it had it cleaned and took it, and that's what he was buried in. You have to expect to die the way that you lived. And so if you didn't leave anything for people to bury you with, don't expect people to come out their pockets to bury you with. So just ask yourself, what the hell am I doing if I don't have no life insurance? With that, I want to say thank you for joining us today. This was a great conversation. It was needed. And I hope that Sabrina was able to convince at least one of you all to make sure that you have life insurance. And with that, I say, let's get into it. Thank you for joining and participating in Let's Get Into It. I want to thank my special guest for being brave enough to get into it. Without you, these conversations cannot happen. Remember, different viewpoints, respect, and love are the foundations of Let's Get Into It. If there's a topic you think I should discuss, drop me a recommendation. If you're interested in being my special guest, let me know, because we can and will get into it. Have a great day on purpose, and I look forward to your continued engagement and support as we get into it.